And if you're anybody else, maybe you're purchasing your second or third home, I know a lot of people are saying, well, it doesn't really make sense because I have a 3% mortgage now, and but it's also quality of life. You know, I wouldn't necessarily want to stay somewhere where I'm not happy just because I had a 2% or I refinanced at a 2%. The rates, really, if you look back a couple months ago, houses were inflated. They were selling for $50,000, $60,000 over asking price.
Yep.
And so what you're really seeing now is, yes, rates have increased, but the prices of houses have come back to really the normal. People aren't overpaying for a house. And so when you look at the interest rate increase and you look at that you're not overpaying for a house, really the payment realistically is very minimal over what it was back a couple months ago.
Yeah. Hey, what's going on, everyone? It is Tim here with the TMA Connection. It's a local podcast that focuses on the lives of people that are making a difference, the community, as well as real estate. And we are jumping into the real estate bandwagon today because today we have a phenomenal loan officer in the house, and we're going to really talk about getting some buyers off the fence because they're nervous about higher interest rates. And this is time sensitive, so once this goes on YouTube, it could be there for a long time, and when you watch this could be at a time where interest rates are lower. But right now, we've seen where the Fed has increased interest rates to the high 6s and even into the low 7s. And so we want to talk about maybe the benefits of still buying a home even when there's high interest rates. And we have none other than Miss Susan Gu from First National Bank here to join us in the studio. So, hey, welcome to the show.
Thank you. Thank you for having me.
Yeah, absolutely. So I did mention that you work at First National Bank, but give everybody a little bit of a background as to who you are, both in and out of work.
Okay, so I am married to my husband for a long time. I have 3 children, 2 adult kids and a 14-year-old.
No way.
So my 2 adult kids are kind of crazy, 22 and 21.
Okay.
And my 14-year-old, what doesn't kill us makes us stronger.
That's our third one too.
Yeah.
That's our third one too.
Great kid, but definitely gives us a little bit of challenge. I have been in the mortgage industry for 27 years now.
27.
So I've been in banking. I started with a local lender and just made the move to First National about three and a half years ago.
Okay.
Amazing products, amazing rates, just a great team. And really probably wouldn't have changed anything. So my previous employer really taught me and got me where I am now.
Yeah.
And First National has just helped my career grow a little bit more.
That's awesome. And we're actually gonna talk a little bit later on about how First National Bank has some great programs, like you kind of alluded to, that really help, especially first-time home buyers, but some other programs too.
Absolutely.
To help them. So, if you're looking to buy a home in the coming year, and you have been on the fence because of maybe higher interest rates, then this episode is for you. And before we get into it even more, just, hey, if this has helped, share it out, comment, get a conversation going, because again, this is super important stuff. And I think we got to get over the fear of buying when it comes to either low inventory or higher interest rates, yada, yada, yada.
Absolutely.
Cool. All right, let's jump into it then. Like I said in the beginning, the Federal Reserve has raised the rates, which has kind of cooled the market a little bit, which I think is a positive. But talk to me about why it's still a good time for buyers to consider purchasing a home.
If you're a renter, it's always a good time to purchase a home. Doesn't matter if the rates are 2% or 8%.
Mm-hmm.
No matter what, it's always better to purchase a home rather than renting.
Yeah.
You're just putting equity in somebody else's pocket.
Right. You're paying a mortgage.
You're paying a mortgage.
But it's somebody else's mortgage.
Somebody else's mortgage.
Yep.
If you're paying your own mortgage, at least you're putting the equity back in your own pocket.
Mm-hmm.
So, that's always a plus. And if you're anybody else, maybe you're purchasing your second or third home, I know a lot of people are saying, well, it doesn't really make sense because I have a 3% mortgage now, and but it's also quality of life. I wouldn't necessarily want to stay somewhere where I'm not happy just because I had a 2% or I refinanced at a 2%. The rates, really, if you look back a couple months ago, houses were inflated. They were selling for 50, 60,000 over asking price.
Yep.
And so what you're really seeing now is, yes, rates have increased, but the prices of houses have come back to really the normal. People aren't overpaying for a house. And so when you look at the interest rate increase and you look at that you're not overpaying for a house, really the payment realistically is very minimal over what it was back a couple months ago.
Yeah, definitely. And when our buyers are now putting in offers, they're not up against 15 to 20 offers as they were before. Yeah, they might be up only against 2 or 3, or sometimes we've even gotten a buyer in without competing against other offers.
Absolutely, and people aren't waiving home inspections, which I personally think is a really good thing.
Yeah.
I'm sure that for you as an agent, it's hard to say put an offer in without a home inspection because you want to protect your customer. Unfortunately, you also have to do what's best for them and try to get them into a home. And when there's 15 or 20 other offers, it makes it difficult.
Yeah.
So, yeah, the Federal Reserve increasing rates honestly is not a bad thing. It's really what makes the market, what's the mortgage industry kind of revolve and grow. So,
and it's all cyclical too.
It is.
It comes in ebbs and flows, and with anything in life, if the pendulum swings too far to one direction, eventually it has to pull back to the other direction to create that balance.
Exactly, and I think that the market, honestly, what happened needed to happen. The rates needed to go lower to spark kind of everything from COVID. Unfortunately, I feel like personally that they left the rates there too long. And that's what's happened. But if you look at the national average of rates and where they are right now, they're actually where they really probably should be. They really should be somewhere between 5.5 and 7. And if you look at the industry and the market in the last 20 years, we're not in a bad spot.
That's the key, is like looking at it from a historical perspective, because even 7% is not, it's not bad, but when you've seen 2 and 3
in a matter of months,
it
literally just was a rocket that took off.
Right. Yeah, totally agree. So as we're moving into 2023, in your education, because we're always trying to educate ourselves and learn, as much as we can to educate our clients, what kind of predictions are the experts seeing for the real estate market going into 2023?
That's another really hard answer. I will tell you, I read a lot, and I'm trying to guess as well as everybody else on what I think the market's going to do. And you read, and there's some things that are saying that the market is going to cool down a little bit. It's going to go, the rates are going to be about 5.5 mid-year, and then there's other things that you read, and they're saying that they're going to be double digits. So, it's really hard to say. There's so many things that play into it. I was really feeling like personally rates were going to go to about 5.5%.
Okay.
In mid 2023. I think we're going to see a little bit of an increase. And then I think things are really going to kind of just stay at 5.5. And then I was reading some other things, and it made perfect sense as well that rates could really increase up to 10%. But it's really hard to tell. It really depends on economy, administration, and there's so many other things so it's hard to say.
Exactly. I mean, we are living in a kind of crazy, unpredictable world right now. But it really, it's tough to judge as a consumer what is real and what is a scare tactic in the media. So for example, when you go into YouTube and you're searching for the TMA Connection podcast, of course, but you might find some other things there too, where like there's thumbnails and people make it very attractive with a nice title, or an aggressive title like shocking, with the person's face like looking like they're petrified, and it's like, people are trying to touch on your emotion to get that click rate to go higher. Or what the news is reporting. So, are there any sources out there that you really feel like are good, reliable sources? And we're not going to hold you to anything, because the only real reliable source is a crystal ball that doesn't exist.
Right. And no, I don't go off of one source. And again, like you said, so many, you just never know what's true and who's really trying to feed off of just fear.
Yeah.
So really, I utilize my team. we're all reading, we're all sharing stuff. Again, my better judgment in reading and looking at everything that I have, I really think rates are going to kind of mellow out at 5.5%.
Okay.
I wish I had that crystal ball.
Yeah.
But my one suggestion would be to everybody is do what's good for you. Don't think that you're going to wait to buy a home because rates may go to 5.5% or rates may go lower. I really don't think we're in the next couple years that we're going to go lower than 5.5. I think that we're going to be, I think we're going to kind of be stagnant.
Okay.
I just physically can't see rates going up in the double digits.
Right.
But again, who knows?
But who knows? But it is still, regardless of where the interest rate is, at some point they will go down. If they went up into those double digits, it's still, for a long-term play, I think. If you're looking to buy a house just for like a year or two, maybe that's not a good time to buy a house. But if you're looking at it as a long-term investment, then
absolutely,
it doesn't really matter what the interest rate is. And if it does go down significantly and it can change your mortgage payment, then go for it. Then refinance, right?
Yeah.
So with these higher interest rates and with buyers still kind of with hesitation, and maybe they're going to purchase in 2023 and they want to put themselves in the best position possible to buy a home. What are things that people can do now to give them the best opportunity in 2023?
I say to everybody, you really, if you're thinking you want to buy in 2023, get with your lender. Find a lender now, do a pre-qualification, and see what it is that you need to work on. You always need to have, it's not even stellar credit, but you need to have your credit put together.
Okay.
You need to have some savings. And you really need to be financially comfortable.
Right.
You don't want to just say, okay, I'm ready to buy a house and get a pre-qualification. So if you have any questions in mind on whether you're really ready to buy a house or what do I need to do or where you really stand, I would say get with your local loan officer, give me a call, and let's see what we can do and what things there are that you need to work on or what can I help you with to get you where you want to be.
Yeah, definitely. And, if there's, sometimes people don't realize that there might be some issues with their credit scores until they actually seek out that pre-qualification from a lender. And there's things that you can do to jack up that credit score because ultimately, even if the rate is a little bit higher, you want the best possible rate, which means you have to have your credit score in that upper echelon of phenomenal credit scores.
Absolutely. So 740 is typically anything above is prime pricing. So you don't realize that your credit score really at a traditional lender really derives what your interest rate's going to be. So, your debt to income, your loan to value, your credit score are all very, very important. And so they're all things to look at ahead of time. And you're right, a lot of people think I have great credit, and then you pull it and they may find that they had a medical collections or they had something that they really had no idea.
Right.
And when you have that stellar credit and you have that one thing that hits you, it really pulls it down. So if you're ahead of the game and you know what you're looking at, it's okay because we have time to fix it. And agents like yourself always want that letter before they even come to you. So if you have time to fix it and get yourself together before you're finding that agent,
certainly there's nothing more devastating than taking a buyer that hasn't been qualified out only for them to realize that there was something that they didn't know. And now that house that they find, that's the one, that this is the one. And then they find out that they can't pursue it. Oh, that's
crushing.
That's gut wrenching,
Yes, it is.
Yeah. So at First National Bank, you guys have some unique products, some for first-time home buyers, some other things. So give us a little bit of what First National Bank has to offer as a lending institution.
One of the first things that I want to say is when I came to First National, I did my homework. So again, I came from a local lender that was amazing. They kept their customers in-house, didn't sell mortgages. And so that was really important to me. And although First National does sell their mortgages, they service the loans as well.
Okay.
which is important to me because I like having constant contact with my customer, and I can tell them, you have an issue, it comes to tax time, you want me to follow up on something, give me a call, I'll get you to the right place. They always have me as a resource. But additionally, we have programs that nobody else can touch. We have physician programs.
Okay.
That is for any medical, I say medical, a psychologist, as long as you have your medical degree.
Okay.
That's 100% financing up to $1 million with no mortgage insurance.
Okay.
I'm actually doing a physician right now, and the rate that he was offered was 5.375.
Wow.
Now that was for a 7-year arm.
Okay.
But we have our physician's loan. We have, again, it's not even a first-time home buyer loan. It's for anybody who does not currently own a home.
Okay.
If they're at 80% of the median income or below. So 80% right now for Maryland is $93,000. That does change every single year.
Okay.
But the household has to make $93,000 or less. We will allow them to borrow 100% financing with no mortgage insurance, and we will give them up to $5,000 in closing cost assistance.
Wow.
It's whatever in section A, B, and C is of the loan estimate. So I'm going to say for a $250,000 house, First National usually gives about a credit of $3,500. So somebody can buy a house with coming to the table with $4,000 to $5,000. There's no limits on reserves. There is no. They can get seller's help, and they can get up to 3% seller's assistance, and they can get gift funds.
Okay.
So credit score has to be at least a 620.
Okay.
Okay. And they have to have at least 3 trade lines with one with at least 2 years. So we don't want somebody that has no credit history coming and trying to get a mortgage. We really want somebody who has a little bit of credit history. But the rate, everybody says to me, Sue, the rate has to be ridiculous. No, it's the same thing as what a 30-year fixed rate is. So right now, our rate for that product is 7%.
Okay.
So it's a really appealing rate. They do need to take a class, but it's an online class that they pay $75 for. They can sit there and do it at their own, and they send us a certificate. And we have that program in a rehab product as well. So if they find a house that needs to be rehabbed, the agent and then will get us, quotes for the work that needs to be done. We'll submit that with the appraisal.
Yeah.
So as is and subject to. And they can do the same thing with the rehab.
Wow.
Yeah. The other thing we have that a lot of people don't have is our construction perm. If you're in a jumbo loan, if you're looking to purchase in a jumbo loan, which is anything this year, 647-200 or above, they can do 10% down, and we will exclude their primary residence. And why that's important is because you're building a home, so you need a place to live.
Exactly.
If you're doing a conforming loan, which is anything above 647-200, you need to, as the lender, we need to add in the rent or the current mortgage that you have, because you're going to have to pay that for the year, and we need to make sure you can afford it.
Yeah.
But First National has made our own program that if you're doing the jumbo loan, we will exclude that primary residence that you're living in currently, as long as you'll put in writing to us that your intent is to sell.
Intent is to sell. Is there a certain timeline that people have to sell? No.
Because you're going to have 12 months of construction.
Right.
So, no, as long as you tell us that your intentions are to sell, we're okay with that.
Okay. Wow. I think what's huge is that the mortgage insurance, because usually anything, more than less than 80-20, right? 80% loan to value.
Correct.
If you're not putting 20% down, you have mortgage insurance, and you have the program that you don't have to pay that mortgage insurance, which is probably going to save you about what, $100
to $140 and
a month.
A month.
Yeah.
And I tell customers all the time that I settle loans for, don't let somebody else come back and tell you when the market's, maybe the rate's gone down a little bit. Okay, you have that 7% now, but you got to remember you're not paying that mortgage insurance.
Right.
So you refinance and you don't have that 20%. You're going to have that mortgage insurance, and if you take that in a percentage,
yes,
your payment's going to be way higher.
Yeah.
So you want to be really, really careful.
Well, what a great way to then save a little bit of money on your mortgage payment when the interest rates are a little bit higher.
Absolutely.
Yeah.
Absolutely.
Because you're not paying that mortgage insurance.
The other thing that First National does that is fairly new to us is if you do need mortgage insurance, we do risk-based pricing. which means most people with mortgage insurance, most institutions use scorecards. So the third-party vendor, the mortgage insurance company, gives us a scorecard, and that's how we price you. First National Bank, I want to say maybe about 6 months ago, got with the mortgage insurance, and we send them the information. So just like when you're getting an interest rate, we plug credit score, loan to value, debt to income into a system, and it comes back and tells us what the rate is based off of the market and what First National has. It's the same thing for the mortgage insurance. So in every case that First National has tested, the mortgage insurance has been 30 to 50% cheaper than somebody who just uses a scorecard.
Wow.
So even with somebody who needs mortgage insurance, just need a mortgage insurance, the benefit's huge, and it's somebody being able to qualify or not qualify for a loan.
Yeah.
So, and I would say again, the VA, we of course do VA, USDA. We have bridge loans that a lot of people don't have. We have lot loans that a lot of people don't have. So First National really tries to keep our rates 1/8% cheaper than everybody else's. I have an amazing boss that is willing to, if it's compared apples to apples, and it makes sense.
That's the key, right?
Yeah, apples to apples.
Because sometimes, somebody will say, well, hey, look, I can get you this rate, but you're not necessarily seeing where you might be paying for it elsewhere.
Well, yeah, so we would ask for an estimate. And I see people where they're, First National's processing and underwriting fee right now is $11.60. And then a lot of people come back and the processing and underwriting fee is $19.95, and then they're also charging points. So I would break that down, and we're willing to work with customers, again, if it's apples to apples, but 9 times out of 10, our rates are cheaper. Your rates are cheaper. And we have amazing products. So it's another huge asset on why I'm here. Yeah.
Well, if people want to seek you out for more information, where can they find you?
They can find me on Facebook.
Okay.
I have a personal page as well as a business page. Okay. I have LinkedIn. You can absolutely call me. My cell phone's 410-977-7302. My email is guesu@fnb-corp.com.
And Jay's going to put that up on the screen.
Yeah, so anybody feel free to reach out to me. Again, I'm huge in just being able to educate people, help people, even if you choose not to come with me. One thing I didn't say is I sit on the board for Habitat of the Chesapeake. And it's probably one of my kind of heartstrings, because I really get to educate people and help people get into homeowners. And that's awesome. If you just need assistance or questions or want to understand something, what an APR is or what, just give me a call. I'm happy to help. That's awesome. That's awesome. And, to piggyback on that, we had a client who was purchasing a home, and of course we don't drop names here. Yep. But in that unique circumstance, they had a better opportunity at a different bank, and you pointed that out and made sure you got them in that right direction. That's pretty awesome. That shows trustworthiness. That shows that you are genuinely putting your heart in the best interest of the buyer. And mad respect for you for that, because not everybody would do that. And that's really what I've built everything on. I just feel like you do right, it's going to come back around, and it's educating people, helping people, and again, just doing what's right. And again, it's not all about money. What comes around goes around, right? Absolutely, absolutely. Again, follow Sue on Facebook and LinkedIn, and we got the information for her email and her phone number. A wealth of information. I appreciate you for coming in. Sue Gu. I mean, that is a name that you cannot forget now. Sue Gu with First National Bank. Thanks so much for joining us today. Thank you. If you haven't followed us yet, what's your problem? Please follow us on Facebook and Instagram at the Markland Advantage. We are on YouTube. Just search the TMA Connection, and we're on TikTok. Are you on TikTok? I'm not. I'm trying. You got to get on TikTok. I know. You got to take. You got to make those TikTok videos, put them on Reels on Facebook and Instagram, and really educate people with all these different financial vocabulary words. I'm going to push you there. All right. So you're going to be following her on TikTok soon, and but follow us as well. Thank you so much. Share this out if you liked what you heard today,
And until next time, live your life to the fullest, and we'll see you soon. Take care.